What's good, traders? Welcome to day number 21 of the bootcamp. If you're new to the bootcamp, make sure you like and subscribe. And today we are going to be talking about liquidity. Now, liquidity is something that is very controversial. Everyone has different opinions to liquidity. Everyone has different, definitions to liquidity. But the way I'm going to teach you liquidity, guys, is at its simplest form. And with this knowledge, you will be able to make money, profits, and be able to find entries, and you will not get swept by liquidity. Okay, so before we get started, I want to talk to you about these three topics that we have here. So liquidity zones, how to find them, and how to trade with liquidity. Okay, but guys, liquidity is simply just testing your patience. The market hates all the small account traders. So all the traders that try to have a small or tight stop loss, all the traders that enter of, a bounce of a key level, all the traders that they need to basically stop you out, okay? In order for the markets to make money, you guys need to lose. And that's why liquidity is so important. So the definition for liquidity, in my opinion, guys, is basically movement in the market. That's all it is, right? Movement in the market, okay? Now, everyone will be saying different rules and different things to liquidity, but guys, when it comes to liquidity, is just movement in the market, and you guys need to make sure that you understand how the market is moving within your currency pair. So today we're going to be looking at Euro USD, and we're going to find liquidity zones, and we're going to see if we can trade with this liquidity zones, okay? Now, I have written liquidity zones, but guys, this is just a fancy word of saying supply and demand zone, okay? And the reason why I'm saying is a fancy word, right? Because liquidity is just another way of saying, supply and demand, or area of interest, or, POIs. And price builds up momentum before it actually makes its move. For example, right? If we were going on a downtrend, okay, and then we see price doing this, okay, this area right here is a build up of liquidity, i.e. a consolidation, right? And what price is doing is building liquidity in the area and then waiting to see who's in control. Is it the buyers or is it the sellers, right? And let's say price ends up going this way, right? Price ends up breaking levels, okay, breaking structure, and basically liquidity sweeping all these sellers here that thought that price is going to continue to go down. Okay, now the reason why I said earlier on that liquidity, price, when it's very liquidated and price is very volatile, is trying to stop you out. Okay, the market is trying to stop you out as fast as possible. So for example, if you are trading, okay, and we see that price has created a new high, okay, and then we go for a sell, an early sell, and we keep our stop loss just above here, right? If price decides to continue, stop these sellers out and then continue to go to the downside, that's called a liquidity sweep. Okay, this basically means that your stop loss was way too low, okay, number one, and number two, price still went in your direction, right? Price has still gone in your direction, but price had to stop out these early sellers here. Okay, so it's very important for you guys to understand that, because without understanding that, you are going to keep losing trades even if it's in your direction. Okay, guys, I know that most of you, when you place trades, especially if you're, placing trades on a regular basis, you have most likely had price go in your direction, but it stopped you out first. And the reason for why this has happened is because you don't know the liquidity zones within the market, right? And this is basically another word of saying supply slash demand zones, okay? Whoa, zones, okay? It's just another fancy word of saying supply and demand zones, okay? So if someone says, oh, what's your liquidity zones? Put it in your brain that all they're asking for is your supply and demand zones. That's all they're asking. They're not asking you to find a certain price point or anything, just simple as supply and demand zone, okay? Now, luckily for us, right, throughout this bootcamp, I've been training you guys to identify supply and demand zone corresponding to your psychological levels. Now, most likely, your psychological level is going to have some sort of liquidity at it, okay? And key example right here, okay? Price, if I just draw an area right here, you can see price broke the structure, right? Price broke to continue to the downside, broke psychological levels, broke, a support zone, right? Right here. And now it's becoming resistant, right? Okay. Now let's say beginner traders, they go for a sell because they're going for a break retest, right? Okay, cool. And we keep our stop loss very, very tight. Okay, we keep it, around 11 pips, trying to get the most out of this trade. Okay, what happens is price goes in your direction. Okay, price continues to go in your direction right here, continues to go, creates a little bit of, movement towards the upside and then continues to go down. And then boom, price stops you out. Yep. Why? Because your stop loss was way too tight, right? Stop loss was way too tight. And then what happens? Price goes straight to your TP. Okay. The reason for why you made a mistake here is because you entered too early. There was no confluences here for you to enter. Okay. This is not a model for you to enter. Okay. Now, how do we find these zones? Okay. How do we find these liquidity zones? Right? Well, in simply, easiest way to find them is find round psychological numbers. And number two, find supply and demand zones, right? So this was a very, very good zone where price, became a support and then turns into a resistance, okay? And then again over here, price comes down, right? And then continues to go down. And this is just a buildup of liquidity. All of this is just a buildup, right? All of this is just building up, right? Creating a new supply or demand zone. That's all it is. So then what happens when price goes up, right? We can see clearly that liquidity brought it all the way down. All the early traders that try to enter here, let's say they move their stop loss to break even, right? They get stopped out. But reality is the real traders enter right here or after this candlestick because we had a moving average tap. We had that liquidity dropping down, testing the sellers. If they're in control, no, they're not. Buyers continue to take control. And then that's where you can then obviously place a trade and continue to the upside. Okay. Now, another way of identifying liquidity zones or liquidity areas is drawing trend lines, right? Now, I really don't like trend lines, guys. I really do not like it. But let's say we drew a trend line right here. Okay. Right. You can clearly see we had that break of trend line, right? Break of trend line, retest of the trend line. Now, usually what happens is this is all a buildup of liquidity, right? All of these areas are built up liquidity where these highs need to get swept, right? Every time liquidity gets built, it needs to get swept, okay? So if price decides to break, what happens? Price is now going to tap into this area right here. Oh, this area right here. Then price is going to tap into this area right here. Okay, and it's going to do that. Why do I know this? Is because this is all liquidity. These are all sellers, right? And remember, markets will always, let's say there's a seller here, right? Stop loss here, sellers, and let's say they're targeted all the way, let's just say, for example, all the way down here. They haven't been stopped out, right? Swing traders, right? Then we had another seller right here, right? All the way down to here. And then we had another seller here. Okay, stop loss, obviously keep it tight all the way down to here. Now, this is more for traders that obviously have a larger TP, right? We would have most likely come out on this psychological level, but let's just say, just for example purposes, so guys can visualize why liquidity is important. The market thinks that there's sellers here, sellers here, sellers here. We need to stop these sellers. Remember, the market is against you. The market needs to stop you out. Okay, it's either you're going to hit your take profit or you're going to get stopped out, and the market's always going to try and stop you out. Okay, so what happens is price is now deciding, and if I just get my brush tool, deciding to now, we had that break, that retest of the moving average, and then we continue to go up, right? And most likely price will go down and up, down and up, and down and up like this, making a new liquidity zones, right? Creating new supply and demand zones, right? Because remember, price doesn't just go straight up, price goes in a trend, okay? And that's pretty much what liquidity is, right? Now, we have how to find them. We've done that. Now, how to trade with liquidity. Okay, now guys, this comes to more of your risk management and psychology. Okay, we can't exactly know where price is going to go. Okay, we don't actually know. But let's just say we placed a sell here because obviously market has decided to create a downwards push, right? We had price going down. We had that break. We now, saw that price create a lower low. Let's just say we entered here and trying to continue to go to the downside, right? Let's just say we wanted price to obviously tap into here, right? Nice 1 to 3 risk to ratio. Where would we keep our stop loss, right? And why would we keep our stop loss in this position? So number one, I would keep my stop loss above previous highs right here. Okay. Now, the reason to why I'm keeping it above previous highs, okay, is because if price decides to go above this zone right here, above this body right here, I would like to be out of this trade, okay? But if price comes into this area, taps into this body, right, taps into here, and then decides to crash down, I'm still in favor and I never got stopped out. And this is how you increase your trades. So number one, okay, to beat liquidity is you need to have patience. Don't enter too early, okay? Wait for price to create a clear signal. For example, over here, right, I would have changed my bias. Why? Because we had nice rejections at my 1.04. We have an inverted head and shoulder where price is testing the neckline right now. Price has tested a neckline. So most likely we are going to tap all the way to these highs over here. Okay. We are definitely going to tap into these highs. And we're looking like we could place a buy position here, right? We had good rejection at this level. Stop loss. Now, where would I keep my stop loss for this type of trade? Well, I would keep my stop loss below these lows, right? Or if I want to be a bit more reserved, I can keep it below the right shoulder, okay? Why would I keep it below the right shoulder? Because if price decides to go lower than here, we can still have price come down and bounce up to the upside. However, if price decides to break this right shoulder, we could just see price continuing to go down. Okay, and that's why it's so important for your stop loss placement. So when it comes to how to trade with liquidities and not getting swept by liquidity, is keeping a little bit of a larger stop loss, right? Not trying to always go for a sniper entry and keeping stop loss low unless you don't mind getting stopped out, but then make sure you're looking for entries, because we could easily have price come down and put some retracement to this level and then continue to go to the upside, right? And so that's why it's so important to understand liquidity and how your pair moves. Okay, if your pair decides to, for example, spike to the downside like this, tap into this zone right here. So for example, this is 1.033, okay? This right here, 1.033, okay? And so now I know that this area right here is a very, very, strong bullish move, and it's going to be an area where when price comes back to this area, we are going to see strong push to the upside. Why? Because it's already done it here before. And I could probably, if price has come to this level, if I go into the 4 hours, I don't think price has come to this level in a while. But if I can find, let's have a look. Okay, let me make it into a horizontal line instead of array. Keep it at these lows. Okay, you can see over here, we can see all the way back in 2022, price came to this level, and you can see it's very much respected, right? Very, very much respected. Okay, you can clearly see this was a buildup of liquidity, right? So because price has continued to go to the upside, and we haven't seen, only price started to go to the downside in 2023, right? And then it continued to go up, and then now price is, making its way down in 2024. If I go to our time zone, right? I'm gonna go actually on the daily. You can see that price tapped here, and now price could continue to go up, right? But you had to tap to this zone to test if sellers, and you can see, wow, look at that, right? Sorry, that's not even the line. So I don't know why the market, there we go. You can see clearly, wow, look at that. Bullish move to the upside as soon as price tapped there. Here, build up of liquidity. So many wicks in the zone, meaning that this is an area that we're interested. It can go all the way back. Okay, cool. This is a demand zone. And then look at this, guys. All the way back in 2022, right? This is getting respected, right? This is the art of price action, guys. This is the art of, understanding the market. So for you guys that didn't have your take profits at this level, you could have easily had your take profits at this level, right? Now, for me, I go for key psychological areas. So for me, I would have had it at a mid-level, which is 1.035, which is obviously pretty far away from this target, but 1.033 is a very strong psychological zone, guys. Very, very strong psychological zone. And I do believe that price can tap back into this area, but for now, we just had a reversal. You can clearly see the head and shoulders, and price is going to go to the upside, okay? So guys, when it comes to liquidity, it's just another terminology of supply and demand zones. When it comes to the way the market moves and how to find them, just look for where there's so many wicks, create that supply and demand zone, and wait for price to get to that area. Let it go in that area, let it tap a few times. Let's see an impulse move like this, see a big impulsive move, and then see price come down. Now, because there's so many wicks over here, we could see price tap into this area, and we could actually get a really nice entry where we keep our stop loss below these lows, and we can get a really nice entry like this. And I can actually get my fib tool, right? And you can see that the fib tool lines up nicely at the 61.8 lines up nicely with all this liquidity, right? I can actually just, so that it doesn't distract you, I could just get these ones out of the way. You guys can actually see that price is could actually tap into this zone right here. Probably keep my entry right here, right? Even though we tapped into the moving average, price can easily come down, tap into this area, okay? Why? Because there's so much liquidity. It needs to stop all these traders. Once it stopped all these traders, we're in the clear, right? And that's why we keep our stop loss below the previous low or previous high, depending if you're in a buy or sell, because that's what's going to make sure that you stay in this trade, okay? So that's how you're going to trade with liquidity. Now, guys, I just want to tell you something, okay? A lot of traders have different terminologies to the market and different way the market moves, okay? And they will tell you, right, that this is a model, right? And obviously I've taught you that this is head and shoulders, but what they will teach you is, for example, and this is why I say it's very important to have one, mentor, one person that you look at when it trades, because everyone has the same picture, but they describe it differently. For example, everyone say this is a high, right? Then price came down, okay? Then price came and broke these highs, right? Broke these highs. Basically, liquidity swept these early sellers, right? Okay, so cool. Okay, price came here. Now, a lot of traders are trying to trade here, right? But what you need to do is need to wait, be patient, okay? Let market create a new low, right? There we go. Okay, and then what we would say, this is where price has mitigated, okay? So we had an inducement here, right? People, this is how traders are going to talk to you guys, yeah? You had an inducement here and you had price mitigated here. This is where you should trade, right? That's all garbage, guys, okay? And the reason why I need to emphasize this a lot, this is just my opinion, but I feel like traders out here are saying, all these crazy terminologies to confuse you guys and make it so difficult when trading isn't that difficult. Simple terms, guys, okay? Price came here, broke structure. It's not going up. These are just stopping our early sellers, right? Creating new highs, right? Then price came down. It created a new structure, right? These are just early entries. Clearly, the market is not ready for its move. Then price came down. Simple terms, it is a head and shoulder pattern. Head and shoulder pattern. Simple as that, guys. Yeah. Everyone's going to teach you all these different models, but they're trying to hide the fact that this is just a simple head and shoulder pattern. And what I'm teaching you is the basic of the basic, where you can learn and adapt to it rather than getting confused and trying to get all these mitigation and all this inducements areas and all this, liquidity zones are here and this is built up liquidity. We need to price this, stop these sellers or out. Guys, this is all confusing and it's just not going to be great for you as a trader. Keep things simple, right? Keep things very, very simple. Don't listen to the traders that have all this different terminologies. Keep it simple, right? Liquidity is another way of saying the supply and demand zone. It's simple as that. If someone decides to tell you that we've got liquidity zone here, inducement here, retracement here, all these words, right? And inducement is just another word of price stopping our early sellers, right? Or early buyers, okay? Mitigation, it means basically retracement, okay? It's just people, and I don't understand why traders want to make it so complicated when it's so simple. But traders out there want to make it look like they know something, right? But in reality is you guys know it, but they just call it different things. And that's why it frustrates me as a trader, because I'm hearing all these traders saying all these different things to me, and they're saying, oh, can you please show me how to find mitigation and inducement? I'm like, what does that even mean? Like, I know what it means, but it's like, why are you trying to act fancy for? Simple, just tell me, can you help me find retracements? Okay, use a retracement tool. How can you help me find inducements? Right? Okay, cool. I can help you find inducements. When there's a build up of, when price is ranging like this or consolidating, price is going to go up and it's going to come back down here to test, right? Buyers to see, are they in control? What it's going to do is going to stop out these people. Is going to come liquidate all these traders over here, get them to stop out, and then it's going to continue to the upside. Simple as that. Okay. And I can go on and on and on and on and on about liquidity, because it's a thing where liquidity is just, like I said in the beginning, is just price moving in a direction. That's all it is, right? It's like, for example, over here, we had so many wicks and liquidity is built up of wicks, right? But because you are, a smarter trader and you don't fall for these traps, you're not going to sell within these zones. You're going to wait for price to come here. Okay, price came down. Okay, this, if we scale in, is another head and shoulder pattern, right? Left shoulder, head, right shoulder, and then we continue to go down, right? You can clearly see that we could have easily entered or even entered on here and continue to go for the sell, right? Simple as that, guys. Keep your trading simple. Don't overcomplicate your trades. Keep it nice and simple. Keep it, as easy as you can have it. If you like calling, mitigations instead of retracements, that's completely fine. If you like calling inducements inducements rather than it's just stopping out early buyers and sellers, completely fine. If you guys want to, instead of call it supply and demand zones, and you want to call it liquidity zones, that's completely fine. I call it area of interest, supply and demand, support and resistance, they're all the same thing, right? Don't get confused or don't think that you're learning something new because another trader has said these things. Okay, so a few tips before I end this video. Number one is the market's always going to test your patience. Make sure you are patient in the market. Don't go for the silly early traders, the early sellers that came here, because you are going to get stopped out, right? Early sellers, we had simple break, retest, early sellers. This is early sellers right here. This is when price barely moves. Sorry, when price barely moves, just know that, just come out the trade, wait for price to come back, right? When price barely moves, just know, guys, that, price is basically building up liquidity and is going to stop you out, right? So if you enter trading, it doesn't go in your direction straight away, or it doesn't go in your direction within a few hours. For example, here, this is, the 1 hour time frame. That means that it's just building liquidity. Come out the trade, look for better entry. Okay. If price, so that's the point of being patient, right? If price, comes up and then comes back down, that was just testing these early sellers. And even if you did enter for this sell right here, even if you did enter really, really early, keep your stop loss at least a few pips up. So even if price did decide to come back and test your trade, right? You have more than enough time, more than enough, room, breathing spaces in your stop loss to hold this trade. So this is just could be another entry for you, right? So even if you are being patient, and even if you even if you didn't be patient and you enter the trade a little bit late or a little bit early, sorry, you can still keep this trade running. Just keep your stop loss a little bit high. Guys, it doesn't have to always be a thing where you keep the stop loss super, super tight, right? You're always going to get stopped out if you keep it super tight. If anything, for this trade, you can easily keep your stop loss above this zone right here, right? Easily keep your stop loss above this zone. Why? Because if price decides to go above this area, you could just find another entry, right? And you had more than enough. Look at this, guys. Yes, this is testing your psychology, but price, you had more than enough. There was no signal for price to go up and continue to go up. Price just wanted to stop out the early sellers, and price continued to go down. Why do we know this? Because number one, if it wanted to continue to go up, we would have seen price continue to go up and then retrace. If price has gone up and then is straight away going down, right, you're in the clear. You're still good in this trade. That's why it's so important. Keep your stop loss above previous highs. Okay. So guys, if that helps you with understanding liquidity, I hope you guys liked the video. If you guys didn't understand it and you want me to break it down even more, hop on my Discord, ask me that question, or ask me any questions on the Discord server. Link is in the description below, so that then I can help you. And if you have any questions with regard to the bootcamp or any topics that you want me to speak about, always comment it down below. Or if you have any questions, you can always comment it down below as well. I'll always be up to, I'll always respond. I am always checking my comments every single day to make sure I respond to you guys. We are killing it in the markets right now, guys, on the Discord server. So please don't miss out. Make sure you're there and tuned in the Discord server. And when it comes to entries and things like that, everything is put into the Discord server. Other than that, guys, I hope you guys enjoyed this video. I know we went a bit controversial with this video, and I've kind of, told you things you kind of already knew, but this is liquidity. This is how the market is. And you're going to hear me. I'm going to repeat a lot of things. Why? Because everything kind of matches like a puzzle and everything becomes one piece. And so the simpler you keep the market, the easier it's going to be when it comes to you trading. All right, guys. So that's pretty much it. Hope you guys like this video. Make sure you like and subscribe if you haven't already, and I'll see you guys tomorrow.